All right, welcome to Turnaround Tuesday live with EmpowerAg Trading. Thanks for jumping in here today. We've drop a question, drop a comment. We invite you to be a part of the conversation every day, every time. We've got ourselves quite a market. It's been a great few weeks here in the grains. Um, Dynamic couple of weeks. Kicked things off with the WASD a couple of weeks ago. We've had Black Sea drama. China's keeps coming to the table with buying beans. And last week we had the Pro Farmer Tour that really fed this bull market, dropping a 173 corn yield number on Friday. Led to a strong open on Sunday. Been bouncing around on both sides. This market's continued to show some strength and resiliency, though, but a lot of volatility. We'll get into the show. Drop us a comment. Let us know what you want to talk about. And thanks for joining us today. I'll roll the intro and we'll quote up the market and dive in. All right, thanks for jumping in. It's great to have a bull market, great to be in a bull market, and they're just so much more fun than bear markets. When you see a bunch of red on the screen, like cattle, which we don't want to talk about very much right now, those are a lot less fun to talk about. So let's quote things up, and then I'll bring my guest in, Connor B. with agmarket.net. When we look at the markets here right now, we got Dees corn up almost a nickel at 520, just dancing on that 520 area. We've seen a low of 512 and a half and a high of 521. You look at Dees 27 corn, 518 on Dees 27. Nove 26 beans, 1232, up 8 cents. KC wheat, got SEP KC wheat up a penny right now, right at that 750 level. Chicago wheat is up a penny and a half at 683. Wheat's been all over the board too. Chicago wheat on the SEP contract, 688 down to 667, so 21-cent trading range on SEP Chicago wheat. Feeder cattle were weaker. Feeders are down 460 on the SEP contract, down 435 on your October. Live cattle are down $1.40 in August, and October's down 245. So don't want to talk about live cattle. Lean hogs down $1. Looking at your macro markets, we've got, if I can scroll down, macro market, the Dow up 97 points, the S&P up 18, the NASDAQ up 170. Dynamic markets in your macro markets, they're moving around quite a bit. Energy markets, you got crude $82 a barrel on your WTI, down almost $3, down 290. Crude was dancing on $90 last week. I think we traded over 90 maybe. Yeah, energy markets are moving. Heating oil is down a penny, and the dollar, what's the dollar doing? 98.95, relatively unchanged on your dollar market. All right, let's get him in here. Connor B, how you doing today?
I'm doing good. Hey, when you were quoting up the markets, I actually had an alarm trigger for me. Nove 27 beans just crossed $12.
$12 on
I think the recent price action, I don't think a lot of guys are going to be selling that. Given break evens, I'm not sure 12 makes them a whole lot of money for next year. I always have round number alarms in. So $12 Nove 27 beans.
alert going off. Yeah, $5 corn, $12 beans on 26 and 27. Good to see us back in those territories. But yeah, like you said, input prices, uncertainty on production, on cost of production. Those, I mean, you got diesel markets doing what they're doing, fertilizer markets moving around. Nothing's getting cheaper in this world. And are we at a new price paradigm? Do these markets need to do more work to incentivize guys to pay the bills? So good stuff. Makes it hard to go out there when you don't know. That's, I don't know. Some of the best times to go market is when the uncertainty is the highest, right?
Right. But when I'm looking at next year, there's again 5 and 12 if it's profitable on your farm, 5-10%. Nothing wrong with that. But I think the price action we've seen, I think most people are going to be pretty hesitant to look at next year. We're starting off the show. We have so much to talk about, and we're talking about 27 crop, Brady. This is on me. I'm looking forward too far. Let's talk about 26. And we got a market, this core market today. I got in the office. We were a little bit negative, unchanged, and this thing keeps rallying. It's up 5 cents, and we keep going higher. It feels great.
Yes, a long way. We've come a long way. What was the low back in June on D's corn? Were we? Let me look here. 425 and 3/4, 425 and 3/4, and here we are, almost $1 above. Our high today is 521. What was our high yesterday? We were 524 and a half. So dang near $1 rally off those June lows. 80 cents, $1 trading range in the calendar year for corn. It's a big range. It's a lot of movement. It's emotional. It's hard. I mean, we've come a long way. It's good to see us where we're at right now, but it's hard to go sell that last half of your crop. In my part of the world, we talked about this last time, in my part of the world where you're not sure if you're going to have those extra bushels. The first half of your crop is the easiest to sell. The last half's the hardest. What do you think of this market, Connor Bean?
Yeah, well, I think we got to point out how counter seasonal or how adverse this year's been, right? If everything holds today, we put the low in June and we're making new highs in August, and looks like we can maybe continue to make new highs, hopefully into fall. That's not supposed to happen, Brady. When's the last time we put lows in June, right? And so I think it's a good sign for a longer bull market. I think we're going to get into it, but a lot of factors that could trip that up. There's a lot of moving pieces in the world right now, but that's a good sign. That's showing some strength when we're supposed to be seeing funds sell off, right? We're supposed to put the lows in August and we're making new highs. I think it's a good sign for the corn market. Beans having a nice rallies, nice as well. And we're seeing wheat hang in there. Wheat, I don't know how much we want to talk about wheat, but one thing I've been trying to remind guys is that this Ukraine-Russia deal, I don't see an end. It looks like it could be a big market disruptor. But I think the big thing to keep in mind is that Russia still has the wheat crop, right? That market feels sensitive to me in that if we see something that lessens tensions, I don't know what that is. I don't have my crystal ball in front of me. But it's important to keep in mind that the supply is still there. It's just how are they going to get it out of there is what I think when I look at wheat.
Yeah, I think the risk to me on that front is that we see de-escalation, or we just don't see. You trade the headline once. The second time you trade the headline, it has less of an impact. So this Russia-Ukraine deal has gone on for years now, and we see re-escalation, de-escalation. When they start bombing grain ports, knocking out, taking bushels out, sinking boats, that type of stuff, that's a real deal. But yeah, any progress we see could quickly take some of that risk premium out of the market, and you just got to be cognizant of that. But wheat is not a market I ever want to stand in front of. I remember thinking that $5, $6, $7 wheat was a great number when that initial Ukraine-Russia invasion, and then we go to $10, $11, $12 wheat. Wheat market can move in a hurry. So I've got that seasonal chart. I pulled this in. I just pulled this. Yeah, this is yesterday's, so it's just a day behind here. But it illustrates that counter seasonal rally. The blue line is D's 26 corn futures. The red line is last year D's 25 corn futures.
What a difference, huh?
Yes. I mean, you would have guessed, oh, it's just par for the course here. We'll keep selling off in June and chop around, and maybe we'll get a chance to go sell mid 470, 480 type corn. And whoa, here we go. Up 50 cents since the start of the year. So good to see.
Man. A testament to how fast things changes. And why are we in this market right now is that we had, 2 weeks ago, USDA came in a little bit lighter on yield. And then we had the Pro Farmer Tour came in a lot lighter on yield. I think every day last week, I would get the state yields at night and I'd be like, oh, okay, yeah, South Dakota's under. We saw that coming. Whoa. Indiana's quite a bit lower than last year. Ohio is less than last year. Areas that were supposed to be, a little bit better than last year, or at least holding. And then we had Illinois under. And then I think the big one is that Iowa significantly under than what they were last year. So Pro Farmer number was 170. Do you have was it 172?
173 point
173.
something, 0.2,
Okay.
0.4,
Yeah.
right in
So
there.
7 bushel under where the USDA is. And so, consistently the Pro Farmer Tour they're usually under, they've been over, they've been under, they've been right on the money. Consistently, if we had to make a trend, they're 3 to 4 bushel under what the USDA is. So that 7 bushel difference, that's significant. That got people are paying attention to that big discrepancy.
Right. Yeah. I think that's what led to that gap higher Sunday night. I think, you talk about, is it consistently 2 to 3 bushels behind the USDA? So USDA at 180, 178, 77. I think we talked about that a little bit last week. That would, be what you would almost anticipate for them to print. So printing a 174, exciting. But yet the question is though, we've got a futures market. We trade the information at hand. We trade where we think things are going. We're pricing in all the known knowns today and where we think this market needs to go. Are we getting ahead of our skis here, Connor B? Is this market, we put a nice run on. Are we set up for a disappointment in September if the USDA doesn't follow Pro Farmer's yield number?
I could say, the other thing we have in September is we have a Trump and China meeting. And that's another one. I hope for all intents and purposes, it looks like it's going to be a reason for optimism. We have seen China buying beans. The hope is there that they step in and buy some U.S. corn as well. But absolutely. Can we see what's the USDA going to print for that September? What was interesting to see is, did you see Pioneer came out with their Iowa yield estimate?
I did not.
Much different. They were they were something in 228 last year, and here we go. They were 228.6 last year. This year they got it at a 226. So only 2 bushel off last year. That's a big difference compared to what Pro Farmer found. And so we can sit and debate about who's right, who's wrong. I'm not going to do that. We'll know what the USDA decides to put out there. But just kind of saying that, yes, it's not written in stone that this crop is a disaster. I think you and I are in the risk management business, and that's what we should keep doing, right? Making sure we're if we get a shot at profitability, which if you're in my area, if we've got the bushels in any way, shape, or form, we're looking pretty good there. Make sure we're keeping expectations tempered, but then also I think we got to make sure you're respecting the upside that this market could have. I don't want guys to get runaway bullish, but commodity markets we're cyclical, right? We're going to move higher than probably we necessarily need to, and we're going to move lower than we need to as well. And so, I think I think that's important to keep in mind, is saying like, hey, this thing can't go to $6. It can't do this. We're going to need this story to get to that $6 level, but just make sure we have some skin in the game, I guess is where I'm going with that.
Keep the upside, cautious optimism. It's okay to be bullish. Just don't be blindly bullish and sit here and where's your risk, right? Where's your risk? So,
absolutely.
Yeah. One thing I talked about, I did a video yesterday, sent out to customers, and talked about crop insurance and just where that level's at, where this market's at, managing that gap, respecting, okay, great. If we get to harvest, we're going to raise that floor up. If we stay at this price level, the risk is that we set back when in that harvest time price discovery time frame. If we pull back into that, there's dollars on the table that we could be leaving on the table. So manage that gap between that spring planted insurance number of 462 on corn. Can't remember what it is in beans because I don't care about beans. We just don't.
462, 1109.
1109 on beans. Okay.
Yeah, and then but then 1109. USDA, no one's calling for some bad, anywhere that's growing soybeans. We're not really seeing a bad soybean crop. My area, we got the rains late. We could have a fantastic soybean crop. I think if anyone, sit down and do the math on where your crop insurance floor is on soybeans. It is so far down there. I hope we don't even have to talk about it. That's the thing to keep in mind. Corn, soybeans more than corn, in my opinion, on crop insurance. It's much more weighted to where the yield is going to be. We can out yield our coverage so fast that we could see dollar 50 moves in the futures market and it not affect whether we're getting a payment or not.
Okay. Yep. We just don't grow as many beans out here in western Kansas. You get to central Kansas, they grow more beans, and it's a bigger crop for a lot of my customers. And but yeah, I don't know that number off the top of my head, so I'm glad you knew it, Connor B. But, all right, let's talk about the funds a little bit too, because we got to mention the funds here when we're talking bull bear debate cases scenarios. Because we tightened the stocks to use ratio 10% in the WASD, August WASD. Where's it going to go from here? But the funds, a lot of short covering. What are they? 250 as of last Tuesday. Estimates that they're around 320,000 net long on corn currently since that time frame. So it'll be really interesting where the funds are this Friday. It still baffles me that we have to wait for this report, and it's so backdated and out of date by the time we get it. Why can't we have daily position updates on commitment of traders? But do you know where's beans at? What's the bean? Do you happen to know that number?
Here, I'll get real close here. Sit tight.
But that's one of the risks I think we got to. I always like watching the COT is where's the managed money and gives you an idea of where your risk is. Because if they're really short, that short covering rally of, okay, I need to, if I'm selling grain here, I probably ought to look at protecting against the upside. And if they get really long, you need to respect that length because they can run to the exits in a hurry.
Absolutely. I got them right around 163,000 long.
Okay.
And so it's not. Yeah, I'm with you. COT report. If they're very short, or if they're incredibly short, incredibly long, right? The warning sign should be going off. If we have a market, it's not a tell-all, be-all, end-all, but it's one of those that we got to respect, right? If we see a very long corn position, any negative news is really going to send them running for the hills. I don't think we're in that position yet. I think there's a lot of reasons. If I was a fund manager, to be buying commodities, right? Look at some of these macro markets. I think there's a scenario with some nice headlines that we could see managed money flow into commodities still. But they're getting, we're continuing to add to length. Yeah, it's going to be interesting to see where they're at Friday and how long a corn position do they have, and are they going to be okay carrying that into fall? Would be a big one.
Yeah, how long will they want to carry it? So are we in that environment or not yet? So interesting stuff. A lot going on. That set meeting you mentioned about President Xi coming to Washington, D.C., are we front loading buying all these beans? And we had another flash sale this morning. How many flash sales have we had over the last few weeks?
A lot.
Into
the one, and we had a monster flash sale. Was that Thursday? It was something like 700,000
metric ton. It was like 1.4.
It was Friday. Yes, 700,000 to China, 720 to unknown destinations. And so I think someone thought that unknown destination wasn't going to China, but hypothetical with me, if it was going to China, it would have been like the number. It would have been the 8th largest flash sale we've ever seen on soybeans. That's how big it was.
If it had been put together as going to China as one destination.
Yeah. So monster flash sales, good soybean buying. It's one of those that we're having a little bit hiccups on the supply side, right? That yield's getting lower, demand's fantastic. We don't want anything that's going to derail that. We want to keep that relationship open, keep the door open to see more corn exports as well. And I think that's everyone's hope and what we want to see in the ag world from that meeting in September. Is that the end of September, Brady?
I think it's September 24th, if I don't remember. Yeah, end of September. Yep. And derail this market. What could possibly derail this market, Connor B? You wouldn't put our U.S. government. They would never do anything to hurt an American farmer or rancher, would they? The U.S. government?
I feel like we're segueing into something here, Brady. I have no idea what, but it feels like we're switching topics here.
Yeah. Well, you got to talk about the cattle market and last week's bombshell tweet of whatever planet our administrator lives on. Of we're going to import 300,000 metric tons of lift the tariffs and import over the next 90 days. That tweet just, I mean, how disconnected can you be with your base and burn your base? It's kind of wild to think about. But yeah, we just seem to have some headwinds there that we're just not only you just paddling a canoe upstream with things. The effort to cheapen up beef, and what frustrates me the most, Connor B, is when they get involved, when they do these types of things, it impacts producer prices the most, and you see retail beef stay unchanged or go higher, minimal impact on what the end goal, the reasoning, the rationale is trying to do. So frustrating last week in your cattle markets, frustrating tweet. And under pressure again here today. We continue to, January broke $3 level. That's unfortunate. Buying inventory in this market, it's real tough right now to go out there and do anything to manage risk because you're giving up a discount on the board and you're paying, time premium stuff. You got to get creative, and it's just a tough time right now. If you're putting inventory in the feed yard, the cow calf guy, we're doing all right. We got we don't always get paid. The margins aren't always there every year. Feeding a cow, taking care of a cow, putting tires on a pickup, putting tires on a trailer, property tax. It's not any cheaper to raise a cow and take care of a cow and raise a calf than it has been. It's getting more and more expensive each year, but it's okay still. But the price action we've seen, I mean, you look at these markets and we've seen $60 sell off, and I don't even, what were we? November feeders 372. We traded down to 305, so $65 sell off here plus this calendar year. It's frustrating. It's hard to watch, but things change, markets change, and that's, I guess, the silver lining that I'm hanging to, Connor B.
Yeah, and to me, it's a testament to, it's how fast things can change. And we talk about China. Like I said, for all intents and purposes, it looks like the relationship is good. China is buying U.S. soybeans. They are honoring their commitment. But today we had more tariffs announced on Canada. It was something like 50% on, I think, all across the board. It's a bunch of goods. Canada reciprocated and put 50% on us. And it's just, you got to be ready for any type of situation, I think. And that's something that it's just in the back of my head, is that if we see that relationship with China sour for whatever reason, I have no reason to believe that it will, but things can change very fast.
Yes. Yep. Well said. So grain farmers, pay attention to what happened to the cattle market last week. What's happened to the cattle market over time? Tweets, administration, disappointment, things can change quick, and don't be, I guess, try to protect yourself from being a victim of that type of outcome. Yeah, I think that's a good message. Yeah. But it's hard not to embrace this bull market in the grains too, Connor.
I am embracing it full. I talk about bearish things because we're in risk management. If you're long corn, my conversation is going to be how can we offset that risk, right? Mm-hmm. And a lot of us are long corn, but I am embracing this bull market. This is fun. We're getting very close to $5 cash corn in Central Illinois. We're about 9 cents away. I gotta think we get to about 525. I bet some guys are going to start getting texts saying, "Hey, 25 under, we can buy a little $5 cash corn." So yeah, it's fantastic. There's a lot. You mentioned that tight stocks to use number. If we see another yield pullback, if we go from, what's a 178 due to the balance sheet? Maybe we do that next week. Is just play through some numbers about how tight this thing can get very quickly. And so right. I'm embracing it full-heartedly, Brady.
Yep. Well, each at 90 million acres of harvested acres of corn, each bushel is 90 million bushels that comes off, and at 180.7, that's almost 3 bushels. That's
right.
Yeah. I'm not much of a mathematician, but I'd call that 270 million bushels coming off the balance sheet. The question, what's going to happen with feed residual? What's going to happen with some of the demand side? They got to be making some of those tweaks, but it still looks a little tighter. Looks like smaller crop could be getting smaller, tightening up maybe more. So a lot of things to play out going forward. Though, question before we go, completely different topic came to my mind. Okay, rate hikes, Fed rate hikes. Okay, interest rate. It's a big deal. We're borrowing more money than we ever have in ag, right? It costs more to do things, spending more money, borrowing more money. Interest rates are the highest you and I have seen them for a lot of our lifetime. I mean, we're born in the 80s, at least I was. Were you born in the 80s, Connor?
92.
Oh my gosh, you're a child. No, but okay, my question, Connor B, before we go, and you viewers leave a comment down below here too. Rate hikes going forward the rest of the year. Are we going to see a rate change? 1 hike, 2 hikes, no hikes? What do you think? What's your gut tell you, Connor B?
I think if we're going to see a rate change, my money's on a rate hike in this environment versus seeing a cut, which is something completely different than what I would have said in January. But will we see one? What do the odds say? I want to lean towards no, but I think if we're going to see one, it's going to be a rate hike. What do you think?
Yeah, I think the Fed Watch tool is pricing in a hike potentially in September, like a 50 to 60% chance of a hike. I'd have to go look at the latest number. But at one point it was 2 hikes for the end of the year. I'm kind of in the camp that all talk and no action. That's not going to happen.
Yeah.
So I would, if you were to put me right now on the spot, I'd say no hike this year.
But, yeah, I agree. We're in agreement. So either we're both right or we're both wrong. Best way to be.
Cool. All right, Connor B. Well, you've had your phone blowing up on you. I'm gonna let you get back to those calls. Appreciate y'all jumping in and joining us today. Each Tuesday, Turnaround Tuesday. Connor B. agmarket.net. Any closing comments before we roll out of here?
No, let's we've got corn's rallied an extra couple cents since we've been on this call. So I think some good targets out there. Let's hope the bull market keeps going.
Keep it going. All right. Till next time. Thanks for joining me, Connor B. Thanks for joining us today. See you guys next week.
See ya.
Bye.